Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. The EU fights back. Just an hour after the US imposes global tariffs on steel and aluminium imports, the EU retaliates with duties on 26 billion euros of American goods. Asian stocks gain, with futures pointing higher ahead of US inflation data as President Trump downplays the risk of a tariff-led recession.
Do you think there will be a recession?
I don't see it at all. I think this country is going to boom.
Plus, Ukraine accepts a US plan for a 30-day ceasefire after 8 hours of talks. The White House puts the pressure on Russia, saying it takes two to tango. So the trade war takes another step and becomes deeper and wider. The EU putting in place retaliatory measures. Those will kick in on April the 1st. They are open for negotiation. European futures looking past a tariff risk, though, after Trump, of course, about 2 hours ago, put in place those tariffs on aluminium and steel. So far, markets pointing higher, maybe latching on to the comments from President Trump suggesting that recession risks are overblown, possibly as well taking some solace from what is happening in terms of the geopolitics around Ukraine. European futures pointing higher in the session by more than 1%. We'll see if that holds as we lead to the open in Europe. FTSE 100 futures here in the UK looking to add 43 points. You look at the metal space. We look, of course, at the miners at the open as well on higher metals prices, on iron ore, on copper as a reflection of some of these tariffs. S&P futures stateside looking to gain 0.3% after losses again of 0.8% by the close yesterday. The S&P still closing in on correction territory with losses of about 9% since those record highs. Nasdaq 100 futures looking to add 76 points, up 0.4%. Goldman Sachs, by the way, cutting its forecast for the S&P to 6,200. That's still an 11% gain from where things stand right now. But talking about the Magnificent Seven, going from the Magnificent Seven to the Maleficent Seven. Let's flip the board and have a look cross-asset. Money moving in still into US Treasuries. We look ahead to the CPI print, of course, later today, whether or not inflation becomes a challenge again in a question mark scenario where the recession risks in the US are being debated. 426 right now on the benchmark 10-year yields down 1 basis point. Euro dollar still above that 109 level, but just down 0.1% in the session. And there's the aluminium pricing then up just 0.4% so far in the session on the tariff story. Brent at $69 a barrel, up 0.5%. So within the last hour, the European Commission has launched countermeasures to the new US tariffs on steel and aluminium, with plans to impose duties on American goods worth 26 billion euros. For the details, let's bring in opening trade anchor Kriti Gupta. Kriti, let's start with that EU response then. What are the details?
Well, I think the details are still a little bit hazy, Tom, but you mentioned it right there, 26 billion euros when it comes to the goods that are imported from the United States into the EU. Basically, you're opening kind of fire when it comes to those potential reciprocal tariffs. You go to look into the details, though, in terms of what the biggest trade relationship looks like between the EU and the United States. Let me walk you through a good chunk of it, because a lot of it is baked into the energy story from about 2 years ago. The biggest exports that are coming from the United States into the EU are things like energy, for example, petroleum, oils, and especially LNG is going to be a big, big one. The second there is medicinal and pharmaceutical products, and then it's followed by things like engines, aircrafts, and car parts. So you are really seeing a lot of these major sectors that we keep an eye on in Europe, the car sector in Germany, arguably in Spain and Italy as well. Then things like pharmaceuticals going into especially the medicinal kind of industry here in the UK is a big one. I know this is for the EU, but that's one to keep in mind in terms of the ripple effects there. And then, of course, the oil story, the energy story, the LNG story coming from the United States into Europe, really replacing a lot of those flows from Russia. That's where a lot of that trade is baked into.
And the news flow of today on tariffs, after a wild day yesterday in terms of the threats and then walking back of some of these tariffs and duties as well. The US president dialing back a threat then, Kriti, to double US tariffs on Canadian steel and metal imports to 50%. But he reiterated he wanted the country to become the 51st US state.
He was a gentleman. Look, I said it before. We give Canada $200 billion a year. We subsidize Canada between all of the things we give them and trade. We give them, we don't have to have cars made in Canada. We don't have to have lumber from Canada. We have tremendous lumber. We have tremendous trees. All I have to do is unfreeze them from some of the restrictions. And frankly, the way that gets solved is Canada should honestly become our 51st state.
He's not letting go of this aspiration, wild as it may seem to some outside of the orbit of President Trump. They have very good lumber, it seems, in the US. Talk us through what is happening on the tariff, the risks and the threats around Canada. There's a walkback. Ontario pressed through with some electricity duties. What is going on there? Where does Canadian and US trade stand at this point?
In a very precarious situation, but I think it's helpful for our global audience to walk through what that relationship actually looks like, because, of course, we know he mentioned it there in those comments, things like electricity, things like lumber, of course, and car parts. But I think it's important that when you look at the geography of the United States, the northern part of the United States, the Rust Belt, if you will, is right on the border of Canada. So there are plenty of people and plenty of kind of car parts and car vehicles that in the process of that manufacturing process go back and forth in the border. That's the process that he's referencing, not excluding the labor that comes from Canada. There are plenty of people employed within the United States border that end up living in Canada and use that border to go back and forth. It's the same thing on the southern border. Plenty of people who live in Mexico that cross the border back and forth to go to work, not unlike things that we see in Luxembourg and France and Germany and on the borders here within the EU. It's a very similar dynamic. The argument he's making is that some of the other exports, things like electricity, could be things that are generated within the United States, and that's where he wants the equilibrium. The risk here, and you can notably see it in his comments where he's specifically not mentioning, is the energy story. And if you talk to the likes of Trafigura, for example, or some of the other kind of big oil names, they'll say the biggest concern between the United States and Canada's relationship is actually the energy story and how much of Canadian oil is not only making it to the United States through some of the key pipelines that come into the country, but are also getting refined in now other parts of the world because they don't want that U.S. exposure. That's the big risk that we have to watch out for.
OK, Kriti Gupta, opening trade anchor, breaking down the complexities of the tariff story for us this morning. Kriti, thank you. Let's cross over to Asia right now, see how the markets there are adjusting to the news flow. A bit of a mixed picture. Let's bring in Avril Hong, standing by in Singapore. Avril.
Yeah, Tom, somehow the region stocks are looking past the tariff back and forth, the imposition of levies, region's benchmark after 3 sessions of losses in the green. That being said, the recovery today in the region is pretty narrow. It's kind of confined to tech stocks. We're also seeing the likes of the Australian benchmark nearing correction. So clearly there's still a lot of uncertainty out there that's being reflected in the recovery. And we're also keeping a close watch on Japanese stocks, part of their rebound today as the yen's rally takes a bit of a breather, and this is despite the BOJ's Ueda signaling a hawkish hold next week, saying, you know, there's not much concern when it comes to these higher yields in Japan, sounding quite unbothered there. Flip the board. Let's talk about Chinese stocks. US-China trade tensions continue to weigh. These tariff talks, according to sources that spoke to Bloomberg, remain at these low levels. So frustration for investors, but there seems to be still that air optimism latent from the NPC carrying through. There's set to be a conference later in the week in Hangzhou where DeepSeek was founded. Alibaba, Huawei reportedly going to be in attendance. Chinese computing-related stocks, some of them surging by limit up. Flip the board again. I just wanted to put things into further perspective for you when it comes to the Hang Seng Tech, because you've seen these declines today after a really powerful rally since the middle of January. So maybe it was due for a bit of consolidation. And if you look at the trend lines, it's actually well below the 50-day moving average. So a sign of strength. Maybe tech can continue fueling the divergence of US-China stocks.
OK, that tech story and, of course, the focus at the National People's Congress on building out that innovation, as you say, continues. Avril Hong in Singapore, of course, breaking down the market action in Asia. Thank you. Now, President Trump has downplayed the risk of a tariff-led recession. Take a listen.
Do you think there will be a recession?
I don't see it at all. I think this country is going to boom. But as I said, I can do it the easy way or the hard way. The hard way to do it is exactly what I'm doing, but the results are going to be 20 times greater.
OK, for more, let's bring in Bloomberg's Valerie Teitel. Val, the market reaction to Trump and the recession calls, he didn't push back on it over the weekend. He took a firmer line yesterday. Where do we stand on recession risks and the Trump administration's views on how that economy is unfolding?
Yeah, look, Tom, a big swing in the S&P 500 yesterday in late trade. A lot of it have to do with him pushing back those tariff threats on Canada. Saw the S&P rise 2% in just an hour's time. Yes, we did end the session lower, but we closed just shy of correction territory, just shy of that down 10% from the peak. We have had a few Wall Street banks continue to downgrade their outlook for U.S. stocks. The latest one coming from Goldman, cutting their year-end forecast to 6,200 from 6,500. But, Tom, that's still implying an 11% rise from Tuesday's close. That's on traders' minds right now. Are we in oversold territory for the S&P 500? If you take a look at my next chart, the RSI, the relative strength index, is actually at its most oversold since 2022. If we still get more tariff threats from Trump that continue to be walked back, is this a buying time for the equity market? Should we be buying into this dip? That's what many people are asking themselves today. Maybe we get to take our eye off the tariff story for just a bit as our focus goes to inflation, dropping at 12:30 p.m. UK time, an hour earlier than usual. Eyes will be on that core CPI month-on-month metric. After last month's print came in hot at 0.4%, we're expected to see a retracement to 0.3. Perhaps some solace on the inflation front. A softer print can maybe turn this equity market around.
OK, looking for that inflation story and whether or not the dip buyers start to get a little bit more appetite when it comes to the sell-off that we've seen in the S&P 500. Thank you, Val, very much for the market check. Let's get back to geopolitics. It could be one of the catalysts in terms of how we're thinking about the positioning around European stocks today, with futures higher by a little over 1% so far in the session. Of course, we've had a deal, it seems, from the US and Ukraine around a potential truce. But, of course, the key player next is President Putin, of course, and whether or not the Russians get on board with that. We've been hearing from the foreign minister over in Russia, Sergei Lavrov, of course, who has been in that role for a number of years. He has been speaking to the state-run news agency in Russia, the TASS news agency, saying that it would be an illusion that Russia turns away from some of its partners, including India and China. Here's the important line, though. NATO troops in Ukraine as peacekeepers unacceptable, says the Russian Foreign Minister Lavrov, also saying that the Europeans want to raise the ante in Ukraine. That is the response from Sergei Lavrov, speaking to the TASS news agency, again seeming to draw a red line around a proposal that European countries are thinking about in terms of potentially European troops on the ground in Ukraine as part of peacekeeping efforts. Lavrov saying NATO troops in Ukraine as peacekeepers would be unacceptable. Staying with this story, Ukraine has accepted a US proposal for a 30-day truce with Russia in exchange for lifting a freeze on military aid. The US will now take the proposal to Russia's President Vladimir Putin, as I mentioned, to seek his agreement. Bloomberg's Oliver Crook has the details. Ollie, talk us through what has been outlined in this deal then.
Yeah, listen, Tom, I think we should just begin by saying that this is not the outcome that the Ukrainians wanted. From the very beginning of any of these discussions, what Zelenskiy and many of his team have been saying is that basically they want to negotiate the full peace, the full, just, and lasting peace. And it was only after that blow up in the Oval Office and then the ensuing basically withdrawal of U.S. aid and U.S. support and intelligence support, really an unprecedented act by the United States for an ally that has basically brought Ukraine to the negotiating table in Jeddah over 8 hours of talks, from which they basically agreed to this 30-day ceasefire. So what this actually includes is that this is supposed to create the conditions to actually negotiate that lasting peace. What will it also agree? This is a 30-day ceasefire, but it can also be extended if it is agreed by both sides. There's exchange of prisoners of war in this. There's a release of civilian detainees. They want also the return of forcibly transferred Ukrainian children. Both sides now will need to name negotiating teams. The U.S. wants the negotiations to begin immediately. But what is sort of critical here is that this has basically been agreed by the Ukrainians with basically no direct dialogue with Russia, and it's all in Putin's court at this point, right? And this is also another part of this. The Ukrainian delegation, this is part of the statement, reiterates that the European partners shall be involved in the peace process. That is something that notably in a joint statement is only something that is insisted upon by the Ukrainians. Of course, the Europeans are nowhere to be found in any of these discussions so far, which of course is going to be a major concern for everybody in the capitals across Europe. Of course, there is that G7 foreign ministers countermeasures meeting beginning today in Canada, where maybe some of these other teams will be briefed about what is going on here and basically to see what potential further input they could be. But again, at the end of the day, the ball now is in Russia's court.
It is in Russia's court, and it's a real test, isn't it, of the claim from President Trump that Putin is ready to talk peace. What are you watching for in the days ahead?
Yeah, so listen, what we expect now is we expect Steve Witkoff to go. He's been one of the big negotiators, both in this ceasefire agreement, if it were to come to pass, as well as the one with Israel and Hamas. You know, the art of the ceasefire is different from the art of the lasting peace deal. So he is going to go to Moscow, we understand, and have some discussions with Russian officials. I mean, as you were just saying, we had some lines crossing from the Russian foreign minister here, Lavrov, saying, you know, basically trying to set the conditions for what is going on in terms of the negotiations, saying that the Europeans are trying to raise the ante on Ukraine. This is from Russian media, and that NATO troops as peacekeeping is basically unacceptable. What I think is interesting is that we've heard a lot of the sort of the constraints that the U.S. is willing to impose on Ukraine in order to get them to the table. The question is, if Putin rejects this, if the Russians reject this, what is the U.S. prepared to do? We've heard from President Trump saying that basically they could ramp up banking sanctions, they could do more on fossil fuels potentially. And Marco Rubio was asked this in the press conference yesterday. I mean, what he said was that basically, and he continuously reiterated that they hope that Russia will sign this deal. If they don't, then we'll know who the impediment to peace is. Again, we do not know what the United States is willing to do to sort of ratchet up the pressure to Russia to drive them to the negotiating table. But again, I think that many of the people who have been critical of Trump's approach is not in his pragmatism, but in sort of giving ahead of time, basically no to NATO membership, giving these territorial concessions, basically doing those out in the open, though realistically a number of those will have to be concessions probably made by Ukraine. I think the hope was that that could be done and closed doors at the negotiating table and not in public ahead of any kind of negotiation.
Bloomberg's Oliver Crook on the ground in Berlin with the details. Thank you. Coming up, we will stay on that story, discuss the potential truce with Hanna Shelest from the think tank Ukrainian Prism. That analysis is coming up next. This is Bloomberg. Welcome back. Ukraine has accepted a U.S. proposal for a 30-day truce with Russia in exchange for lifting a freeze on military aid. Let's get more with Hanna Shelest, director of the Security Studies Program at the think tank Ukrainian Prism, who joins us from Odessa. Hanna, thank you for joining us and for your time. What do you make then? What is your takeaway from the deal that has been agreed between the U.S. and Ukraine?
I mean, that is just the proposal that two sides agreed. And as we see from the communiqué, Ukraine definitely demonstrated the readiness for the ceasefire. However, the first reaction we felt immediately here in Odessa, the same moment when the communiqué was posted online, Russia targeted heavily with the ballistic missile Odessa port and killed civilian sailors. So you understand that now it would be really important to see not only the first statements from Mr. Lavrov and others, but to understand how the U.S. side reacts on them, because previously Mr. Trump said that he sees the willingness of Mr. Putin for the ceasefire or for the peace. I cannot name the peace when you are targeting immediately such heavily different cities of Ukraine. And this morning, right now, we're also in the midst of the air raid. That's why I'm partially optimistic, because that's allowed these negotiations in Saudi Arabia to restore a little bit relations between Ukraine and the U.S. But if you would ask me, am I optimistic about the final results, let's say, about the possibility to the real ceasefire? Unfortunately, I'm much more realistic, and with the 10 years of the bad experience of Russia violating the ceasefire.
Okay, on that point then, Hanna, what do you think is the positioning of Putin right now? Is it your expectation that Russia will move on any of the lines it's drawn around this conflict?
Definitely no, because we see that their ambitions just increasing. Doesn't matter they are winning or they are losing at the battlefield, because we heard all these months of the pre-negotiations that they would like to control 4 regions of Ukraine, including those territories that they even never occupied in Kherson and Zaporizhia regions. Not speaking about all other demands that de facto would ruin the sovereignty and nationhood of Ukraine. Speaking about the language, church, and even the changing of the government of Ukraine. So just purely when you speak about the territories where they are now. And we need to understand that currently the Russian Federation thinks that they are winning on the battlefield. So they think that they're in the more beneficial position compared to Ukraine when the US is not backing us. But at the same time, it doesn't mean that Russian president would not agree to the certain ceasefire or at least negotiations about the ceasefire. Because first he can bargain about the sanctions that are a serious question for him and his inner circle. The second is because he can accumulate the forces. Now he is using missiles from North Korea or those missiles that are produced right this week, literally. So that means that he also needs a certain post to accumulate the efforts for the next attacks against the neighbors.
Hanna, what are Ukraine's red lines at this point, and what should it be willing to give up?
First of all, the red line is definitely our territorial integrity. And here I would like the viewers really to understand that Ukraine is not fighting for 3 kilometers of the territory. We are fighting for the people that are at these occupied territories, which are under this serious oppression because Ukrainian books are burned proudly by Russians, military at the primary school, and you can be arrested just for wearing something yellow and blue. Just read what is happening at the occupied territories. That's why for us, that is one of the main red lines. Sanctions, reparations, probably some other stuff can be negotiated. NATO membership for Ukraine now is also quite a red line. The reason is that unfortunately we don't have any other security guarantees that can prevent the next attack from Russia. We had 2014, we had the ceasefire and some agreements, didn't work. 2022 happened with the full-fledged aggression against Ukraine. So Ukraine really would like to understand who would help us from the further attacks from the Russian Federation. Other stuff definitely can be discussed.
Is the minerals deal with the US, is that a security guarantee for Ukraine?
Definitely not, at least from my point of view, because if you look what Russia targeted at the first days of the war, there were a lot of the U.S. business there. Coca-Cola plant near Kyiv been heavily destroyed. I can name you plenty of the other companies that are less well known, but with the millions of investments in Ukraine. So in this case, for the Russian Federation, the business is nothing, they can attack it easily. For the United States, will they fight for the enterprise? And that is even not the U.S. business at the territory. Yeah, that is just the fund where the money will come, and part of this money should come to the United States. So that is not the real damage or, let's say, the losses that they will have. That is just the potential losses that they can have. That's why I don't believe that that can be the point that really prevents Russia.
Okay. Hanna Shelest, really appreciate your time and your analysis. Director of the Security Studies Programme at Ukrainian Prism, joining us out of Odessa, Ukraine. Coming up, Europe's political upheaval continues as Portugal's government collapses. We bring you the details next. This is Bloomberg. Portugal's parliament has toppled the country's centre-right minority government in a confidence vote, likely leading to a third set of early elections in just over 3 years. Portugal's premier requested the confidence vote last week, saying he wanted to clarify whether his government had, quote, all the conditions to carry out its programme. The socialist and far-right party Chega both voted against the government. House Republicans in the US have passed legislation to keep the government open past a Saturday shutdown deadline. The bill will likely need the support of at least 8 Democrats in the Senate to become law. If a shutdown does go ahead, the White House Budget Office would decide which federal workers are furloughed and which essential staff must continue without pay. Coming up, we'll discuss the impact of Trump's tariffs and a rocky few weeks, of course, for the markets with portfolio manager from Franklin Templeton Investment Solutions. That is coming up next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. The EU fights back just an hour after the US imposes global tariffs on steel and aluminium imports. The EU retaliates with duties on 26 billion euros of American goods. Asian stocks gain, though, with futures pointing higher ahead of US inflation data. President Trump downplays the risk of a tariff-led recession.
Do you think there will be a recession?
I don't see it at all. I think this country is going to boom.
Plus, Ukraine accepts a US plan for a 30-day ceasefire after 8 hours of talks. The White House puts the pressure on Russia, saying it takes two to tango. And talking of Ukraine, talking of defence, we have lines crossing from the German defence company Rheinmetall, which of course has seen a huge run-up in its share price. Year-to-date, gains of 87% for this German defence company. It is crossing right now and sees 2025 operating margin of between 15.5% to 16.1% in terms of the outlook for 2025. Operating margin at the top end, estimates it's seeing 15.5%. That is below the estimates of 16.1%. So in terms of the margin outlook for Rheinmetall, that is below the estimates, 15.5% versus the estimates of 16.1%. Full year operating margin came in at 15.2% for the last financial year. The estimates had been for 14.8%. So for the full year, the previous full year, it's a beat on the operating margin, but the outlook for the 2025 operating margin story is slightly below the estimates. It sees sales up 25 to 30% in 2025. Let's get more reaction analysis and bring in Bloomberg's Oliver Crook in Berlin, who knows this company very well and is looking at the numbers as well for the details and the context. Ollie, walk us through what kind of stands out to you on the margin story, sales, and how we should be thinking about this crucial defence player.
Yeah, so listen, Tom, I mean, looking at it, I mean, I think overall, in terms of what we said, looking backwards, overall, there's a sort of a miss on a couple of points, whether it's on sales and operating profit, very light. But again, as you mentioned, the margin there, they did better than anticipated last year, and that's really what the key is for many analysts looking at this, the operating margin coming in at 15.2%, the estimate for 14.8%. But looking ahead, again, they're guiding a little bit lower on the margin than I think many had anticipated. So they're looking at basically 15.5%. Looking into 2025, they're looking for something just north of about 16%, but that still beats what we got from it last year. And again, when you look at the sales volumes looking into 2025, we're talking about sales increases of 25 to 30%, right? And just to give you a little bit of context, the top 5 performing stocks since 2022, since the beginning of the war in Ukraine, they're all defense companies. The only one of those whose gains are in the 4 digits, that means 1,200% gains, is Rheinmetall. Again, when we also think about the outlook for this company, it's not just going to be the kind of general defense spending. There's a lot of unknowns here, right? There's that German fiscal plan. If they're talking about setting up a defense fund that could be hundreds and hundreds and hundreds of billions of euros, what we know is that originally the defense fund that was already set up by Scholz, the 100 billion fund, about 50% of that was already captured by Rheinmetall. And when we look at the defense spending that's going to go across from European allies of NATO and basically where they're going to spend that money, again, there's more and more pressure that they spend that within Europe, and we're expecting, according to some of the analysts, that right now Rheinmetall gets about 3% of European NATO defense spending. That could boost to about 7 to 9%. So again, this outlook is going to be somewhat dependent on what these spending plans are going to be going forward. But we're also looking at the backlog. We've got another record backlog. That's another one at 55 billion euros. That's a line that's just crossing. And again, Tom, just to mention quickly on the backlog, this is one of the big issues that we're having for these defense companies. For the defense companies, it's great that they have a huge backlog. What's not great are for those waiting to actually get delivery of all this stuff. And this brings us to the conversation of actually getting that capacity ramp up. And that is going to be the big challenge for this industry going forward.
OK, Bloomberg's Oliver Crook on the ground for us in Berlin, breaking down the Rheinmetall numbers. And we're going from one of the primes, so one of the key defence companies, of course, within Europe, to one of the smaller startups later in the show. So stay tuned for that interview. From the defence story now to what is happening in terms of the retailer, the fashion retailer Inditex coming through with the earnings line. The Zara owner coming through with a beat in the fourth quarter. Earnings before interest and tax coming in at 1.88 billion euros, above the estimates of 1.81 billion. And for the full year, net income for for this company also coming in essentially in line, net income coming in line, but the earnings story in the full year for Inditex is a beat at 7.55 billion euros. Let's get to the broader stock market, of course, given the losses that we saw yesterday again on the S&P, closing in on that correction territory, down a little over 9% since its record highs, dropping 0.8% yesterday. The futures picture looking brighter today, though. Watching, of course, the tariff story, but the broadening out of Trump's tariff and trade war seemingly not putting a stop to the upside that's coming through from the futures story so far. Maybe the focus a bit more on what Trump has been saying about recession risks and, of course, the deal between the US and Ukraine. But we'll see how long this lasts, given those concerns continue around the growth story in the US. European futures pointing higher by 1%. FTSE 100 futures looking to add 37 points. S&P futures pointed gains of 0.3%, but again, after the losses of 0.8% yesterday. NASDAQ 100 futures looking to add 61 points. So European stocks looking to snap 4 days of declines. Let's flip the board and have a look cross asset then. Euro dollar, the last time I checked, was still above the 109 level. We continue to focus, of course, on money moving into US Treasuries. Yields down again 2 basis points on the 10-year, 4.25 as we lead up to inflation data out of the US, 12:30 p.m. UK time. Euro dollar at 109. You're looking at aluminium, of course, on the back of the tariffs that are kicked in now, 25% on aluminium and steel. That metal is up 0.2%, and Brent still below $70 a barrel. Let's get more on the markets now with Marzena Hofrichter, Vice President and Portfolio Manager at Franklin Templeton Investment Solutions. Marzena, thank you for taking the time. How do you think about adjusting the portfolio in light of these tariff risks? What is your assessment as well of today's relatively benign reaction to what we've seen from the Trump administration and the EU response?
Good morning, Tom. Thank you for having me here. So first, let's take a step back. What we are seeing now in the U.S., we see that those tariffs will damage not only the U.S., but also world economy, right? When tariffs implemented, basically all of that as released before, we assess that the average US tariff will go up from 2.5% to, let's say, low double-digit number. And this is assuming full reciprocity, 10% on Chinese goods and 25% on critical imports like aluminium and steel. And this will be the highest since 1942. So basically what will happen, it will dampen the international growth. And we know that elevated uncertainty will have impact not only on consumption, but also on corporates when delaying investments and hiring. So now we are seeing already a slowdown in some economic data in the U.S., measured, for example, by Small Business Optimism Index on the mainstream or services PMI or consumer confidence. So how do we implement it on the portfolio? So well, we are still relatively upbeat and relatively risk-on. We still think that U.S. exceptionalism is not yet over. Of course, the recession risk, as you said, are somehow increasing, and Donald Trump has not ruled out some pain on the economy. But I think it's important to look actually how this U.S. exceptionalism is explained, and we see Marzena, the factors yes.
Marzena, sorry, you've touched on a lot there, so I just want to kind of unpack some of that. On the recession risks around the US, what is your expectation then around how growth unfolds through the year? Why are you pushing back on the concerns from some that we could be hurtling towards negative growth in the US?
Well, I guess the fundamental data are still relatively strong in the U.S., right? We see a lot of noise, and it's really difficult to look through all of that. But the fundamental data on the economy, even if some slowdown, they are still good. Corporates have just reported the earnings season was good, and we have seen also some broadening to other sectors out of tech. And basically this U.S. exceptionalism is basically explained by, tech and the structural trend on artificial intelligence. This has got some scratches, but it's still, and it is questionable, the whole story on AI and the U.S. economy, U.S. corporates in that sector. Maybe there are some questions on the sustainability of the high capital expenditures, and we have seen some profit taking here. But we are still have in place the high fiscal policy, expansive fiscal policy. Yeah. So thinking about such programs like Inflation Reduction Act. And consumer is still strong.
Marzena, on Europe, does European outperformance continue? Does it have further to run, or is it derailed by tariffs?
Well, I guess the tariffs that on aluminium and steel, they will have rather smaller impact on Europe. But also, let's take a step back here. So this outperformance of European stocks that we have seen since the beginning of the year is actually because Europe became more attractive, and the U.S. on the other side is more of a concern. So the European stocks basically have very cheap valuations. And we also have seen some stabilization of cyclical data like M1 or manufacturing PMI. And as already mentioned before in a daybreak, there is a really big expectation of a big government spendings going forward in Germany, but also on defense in the European Union. And last but not least, there is little exposure to IT sector in the European index. So all of that has made European equities attractive as compared to the US, where valuations are high, and as mentioned, DeepSeek has raised some questions and caused some profit taking.
Okay. Marzena Hofrichter, Vice President and Portfolio Manager at Franklin Templeton Investment Solutions, does not see an imminent recession in the US. Further upside, potentially, for European stocks, maybe down to not having too much tech within the mix. Thank you for the market take this morning. Coming up, how tech startups, talking of tech, can help drive Europe's security push. I'm going to be speaking to the CEO of an Estonian defence tech company aiming to reinvent Europe's air defence system, someone with deep experience within the space. That conversation's coming up. This is Bloomberg.
Ukraine accepts this proposal. We consider it positive. We are ready to take such a step, and the United States of America must convince Russia to do the same. That is, we agree, and if the Russians agree, silence will take effect at that very moment.
Ukrainian President, of course, Volodymyr Zelenskiy speaking there. European governments, of course, planning to spend hundreds of billions of dollars expanding and modernising their militaries, but they won't only rely on the large defence companies, the primes that dominate the industry, but also startups that offer rapid innovation. Among them is Frankenburg Technologies, an Estonian-based missile startup. Kusti Salm, the firm's CEO and a former top-ranked civil servant in Estonia's defence ministry, joins me now. Kusti, thank you very much. You have deep experience, of course, in the defence space around Estonia, given your previous role in the government, an instrumental role, and now, of course, leading this startup. Are you getting the funds that you need to build the technology that Europe needs to defend itself from Russia? Are the lawmakers paying attention? Is the funds flowing? Are we feeling the urgency right now?
Good morning. Good morning, and thank you for having me here first. Of course, I think these months, these weeks are the opening of the window in this generation, or even in the last 70 years. This is where the actual thought that Europe needs to start to get their act together is getting home. The actual funding, I think it's not really flooded the market yet, but this is about to come. And also we as a company need to be ready for that.
And you're using technology, off-the-shelf technology that is used for smartphones. The idea is you embed that and you build missile systems. Where are you in getting those missiles into conflict zones, into Ukraine? How far away are you from being able to deliver at quantity missile systems that Estonia and other partners need?
Well, the whole leadership team of the Frankenburg, we have spent a lot of time in the national defense, and the two problems that we have identified the whole market has is that the whole defense kit that the current industry manufactures is just outrageously too expensive. And that means that it's just not available at scale. And this needs to change if we really want to confront Russia, China, and other threats that might confront the free world in the future. So this is what we are doing. We're bringing air defense missiles that will be at least 10 times cheaper than the incumbents, and we're going to manufacture them at least 100 times more than the current industry have. We are actively developing this. This is where the focus of the company is, and we will be ready very, very soon.
Are the main defense contractors, the primes, are they an obstacle to you or a partner?
They're a partner, clearly. We are not alone in this market. The whole defense is the ecosystem between the governments, academia, industry, startups. Clearly, if we see growth, then it cannot only come from the primes. It comes from the primes, it comes from the incumbents, it comes from the other civilian companies moving into defense. And I think if we look at the whole ecosystem of the market, then it will need to also come from the emerging companies. And the emerging companies are startups.
Does the procurement process need to change to ensure that you get a better bite of the apple, that funds are flowing, that you get easier access to some of the contracts?
Well, it needs to change, that's clear. But I think the greatest spark for the change is actually the threat itself. If we see what happened in Ukraine, or even in Europe in the 2022, then a lot of the obstacles were removed on their own. I mean, there have been a lot of talks about U.S. aid recently. Well, I worked in the Estonian government back then, and the things that otherwise would take 6 months, 9 months, essentially happened overnight. And the same was in Germany, France, and other countries. So I think there are no essential obstacles there right now if the necessity really hits the life.
You recently said that Ukraine possibly has about a week left if there isn't a credible plan from Europe. Where does that thinking stand right now?
I think this is a very grim time for Ukraine, very grim times for European security. And essentially it gets down to a bottom line, a very simple principles. If Russians walk away from this war with gained territories, with no security guarantees for Ukraine, US off the Ukraine soil and also, well, potentially lighter impact in Europe, then they have won. There is zero European governments who can go back to their people saying that Ukraine somehow won the war, and I don't know how the Ukrainian leadership.
Why are you convinced? Because you've been pushing this for a long time. Why are you convinced that Russia poses a broader threat to Europe? Why is Russia not done with territorial gains and a buffer zone in Ukraine?
Well, Russia has made no secret out of that. They issued their paperwork at the end of 21 for NATO and for the US, where they articulated their demands in 6 or 8 papers with 30 different points what they really want to do. And they all got down to the point that the European security architecture needs to move back where it was when the Cold War collapsed, essentially at the borders of 97, where the NATO started to expand themselves. It has the arms control, the weapons positioning, the restrictions for access to the Baltic Sea, and many, many other points that all will basically dilute the collective defense in Europe. And this is their intent. I mean, this is what they have made public, and this is what they are fighting for in Ukraine, and they are making this clear every single day, that the root causes for them is not Ukraine, but the whole NATO expansion. And this is what we need to confront.
What are the main defense gaps that Europe has right now versus Russia?
Well, I think there are no categories where we are not lacking. We need to move at least 10 times faster, and the scale needs to be better in shells, missiles, armored vehicles, communications, everywhere. I mean, we are at the brink of the, well, I wouldn't say collapse, but this was really the last wake-up call, and the only solution will be described in euro figures. I mean, there is no other way how we can solve it.
Is the funding that's been pledged from Germany, from the EU, from von der Leyen, is that enough?
I mean, these are very, very serious numbers. 800 billion from the EU, up to 400, 500 billion from Germany. I mean, this is the almost 8 times the annual budget for Germany, 2.5 times for the whole defense expenditure of Europe. So, I mean, they're very serious numbers. The only issue with those numbers is that they are not at the account yet. They were at the beginning of the process. But the strategic aim or the strategic bracketing is right.
OK. Kusti, really appreciate your time, given your experience, of course, within the Defence Ministry of Estonia and now leading and CEO of Frankenburg Technologies. Kusti, Salm, with that deep experience in the defence space on how the Ukraine conflict evolves and the huge gap that continues in terms of Europe's defence capabilities versus Russia, and, of course, the view on Russia's ambitions more broadly. Now, we have some lines crossing. There's a press conference that is being held by the EU on that tariff response. Of course, we know they have and will be imposing reciprocal tariffs on April the 1st in response to the US tariffs on aluminium, of course, and steel. EU leaders will make a statement on new tariffs at 7 a.m. UK time in the European Parliament, so in a little under 8 minutes' time. We will, of course, bring you that response as Europe looks to target around 26 billion euros in US imports to the Eurozone. Also making news and tied as well to Trump, Greenland's voters have thrown their weight behind a slower approach to independence in the Arctic islands' unusually closely watched election. The socially liberal Democratic Party emerged as the surprise winner in a vote overshadowed, of course, by Donald Trump's plans for a takeover of the territory. Despite the global attention, a lawmaker for the party told us many Greenlanders were mostly focused on everyday issues like education and pensions. There's plenty more coming up. Stay with us. This is Bloomberg.
I think you have to say that there's in the range of, I'd say still slightly below, a 50% chance of a recession starting this year.
Former US Treasury Secretary, of course, and paid Bloomberg contributor Larry Summers speaking with Bloomberg's David Weston on the odds of a recession. Recession risks part of the mix, but also the sell-off, of course, in tech and Mag 7, and central to that has been the pull down when it comes to Nvidia, down about 30% right now, this stock from its previous record. And here is the valuation story then in terms of the multiples, trading now at 23 times forward price to earnings. This is the context then. You are back to levels, in fact, when it comes to the multiples that we haven't seen since the launch of ChatGPT. Is that an opening for those who want to get exposure to Nvidia, or a warning sign that maybe there's further downside to this key stock, of course, around AI accelerators? Let's flip the board and have a look at the inflation story. It ties back to what Larry Summers was saying about recession risks. To what extent is inflation going to be another headwind if we see a tick up? The data crossing at 12:30 UK time. Headline is expected to come in at 2.9%. That is the estimate year on year. A key data point for you today. There's plenty more coming up. The opening trade is next. This is Bloomberg.